Everybody's kind of really waiting for Friday's employment report. That employment report is going to be a big mover because when you take a look at the data, the employment data is a lot weaker than what the headline suggests. In the employment data, there is this thing called the birth-death adjustment. What that is that it's a total plug number. They have no data to back this up. But what it assumes is that every month people are opening new businesses. And if they open a new business, then they're hiring people. And they just kind of plug in a number that, oh, we created 250,000 new jobs last month because of new business startups. Well, the problem is a lot of times that people form a business, it has nothing to do with hiring employees. The BLS assumes that every time somebody's forming a new business, well, they're hiring people, and that's not the case. So the problem with the BLS number is that there's this whole plug that every month is adding jobs to the rolls that really don't exist. This is why we've always had an employment report that's very overstated versus reality. And again, this is why we have these annual revisions that come along and we say, oh, well, we reported 800,000 more jobs than really existed. Well, that was because of that plug number getting pushed back out again. So again, I think we're going to see that again this year. That number could be between 500 and 800,000 jobs. That number, that revision comes on the 9th of the month. So we'll have the employment number on Friday, regardless of what it says. The revisions will come out on the 9th, and that'll give us a real number of what kind of actual employment looked like over the course of the last year. Markets don't pay attention to the revisions, though. It won't move the market, but it may have an impact on the Federal Reserve and what they do on the 17th. But on Friday, key thing to watch there is that we may report 150, 175,000 new jobs. That's fine, but look for those revisions because over the last several reporting periods, we've negatively revised those previous months pretty sharply. So a weak number with negative revisions is probably going to be looked at positively by the markets on Friday because it will suggest that maybe the Fed could cut 50 basis points potentially. The odds are very low for a 50 basis point cut, but if that number comes in really weak, that odds for a 50 basis point cut will probably jump on Fridays.